God, am I glad you showed up. Otherwise, I'd just be talking to myself. Right? I'm John Zidar. This is On Top and Hot. And today, it's Wednesday, January 29th. Now, what I like to do is talk about hot penny stocks because I'm a day trader that primarily trades stocks under $5. And I'm always looking for a hot stock, one that has potential to make us money. And Wednesdays are the days I've dedicated to sharing hot penny stocks with you. And I've got a few I want to share. We are going to take a look at a couple different stocks, but we're really only going to focus in on one. But we can't help but talk about the other. This is SGN, Signing Day Sports. She had a hot day, folks. She ran from $2 to $7.20 in the morning. You're looking at over 300% run. She did pull back. We're down here at $4.30 with still 120% gains in our pocket. This company ran because this company had news about them. DRCR, Deer Cashmere Holdings, is merging with SGN up on the New York Stock Exchange. They are moving off of the pink floor on the OTC up onto the major exchange. And they've been hoping to do this for years. They've also been hoping to change their name. Deer Cashmere Holdings is the worst name in the world for a gambling company. That's what this company does. They're involved with gambling. They have gaming platforms. They have traditional sports books, but they also have a very novel product. And it was when this novel product came out that I got excited and I said, look, you put this in the hands of gamblers, this is going to make the company a lot of money. Well, they didn't have any money back then, but they're setting record revenues right now. They just crested $128 million from this new product. So DRCR, Deer Cashmere Holdings, she is an American company based here in New York. She finished today at about 11.5 cents, and she was up only 12% today. As I said, she is on the floor of the OTC. She is a pink, so we don't have any financials we can really focus in on. We don't have any filings. All we really get are press releases down here and these two green ticks if you're lucky. The OTCmarkets.com website, one of their jobs is to verify information on these companies. And I look for these green ticks on pinks. I look for them on all the stocks on the OTC, but especially the pinks since they have no validated information. So we've got a verified profile and we've got a verified transfer agent. It's probably the best we're going to get here. So what is DRCR all about? Well, let's jump into the description first. DRCR, now operating as Swifty Global. Swifty is a technology company operating out of London, New York, and Dubai, developing groundbreaking technology solutions in the gambling and betting sector. With licenses spanning several global jurisdictions, Swifty has successfully brought to market a revolutionary suite of offerings. This includes the company's proprietary swipe betting sports prediction application, as well as its traditional sportsbook and its casino gaming platform. It is that swipe betting sports prediction application we're talking about, Swifty. It's like Tinder. It's an AI app that gets to know you. The longer you use it, the more it knows you. And what it does is it spontaneously brings up small bets during live events, just for a few dollars. And you've got a certain amount of time to either swipe right for yes, I'll take that bet, or swipe left for no. It's an impulse betting application. When I saw this being put into gamblers' hands, impulse betting for just a couple dollars, I knew this was going to make them a lot of money. And it has been very, very hot, folks. Now, this company did not have any news about this merger until today. This is the first day they mentioned it. However, SGN mentioned it back in November. That was the first time I heard about it, and I do believe I talked about this in one of my live streaming events. I did not make a video about it. So it was all the way back in November. It was first mentioned by this company, but was not mentioned by DRCR at all. Now both companies have the news. So let's jump into that news and see what it says. Swifty Global announces signing of share purchase agreement, further to be known as the SPA, to be acquired by Signing Day Sports, ticker SGN, up on the New York Stock Exchange. Signing Day Sports Inc. announced today that it has signed a stock purchase agreement to acquire 99.13% of the issued and outstanding capital stock of Dear Cashmere Group Holdings. Swifty Global is an online sports and casino technologies company with a track record of revenue growth and profitability. Swifty Global achieved revenues of over $128 million and a net profit of approximately $2.44 million for the fiscal year ended December 31st. SGN at the end of December 31st, 2023's fiscal year revenues were $300,000. This company did $128 million. That is something like 426 times the revenues of SGN. In most cases, when you have a merger with a lower class stock, a stock down on the OTC, or a private company coming up onto the major exchange, you normally see that the company on the major exchange is top dog. They've got a lot more shares, they've got a lot more money. That's not the case here, and that's why we're looking at DRCR. Even though SGN is taking the run right now, I don't think entering into DRCR is a bad option. First off, they are two separate prices, right? You got one up over at $4, and you got this one down at 11 cents. So maybe it just makes better sense for you. But I want to show you why I do think it makes better sense. So they go on to tell us that we see this SPA as a significant step toward accelerated expansion, enabling us to leverage Swifty Global's cutting-edge software-as-a-service technology to enhance operational efficiency, reduce costs by 50%, and accelerate product development. Together, we can expect to increase user growth, retention, and new revenue opportunities while expanding into emerging markets across Europe, Africa, and the Middle East. Following the closing of the SPA, Swifty Global will operate as a subsidiary of Signing Day Sports, with its financial results being fully integrated into SGN's company results. Signing Day Sports legacy shareholders are expected to retain approximately 8% of the post-transaction company shares, with the remaining 90% being issued to the sellers and the other stockholders of DRCR. That's us, folks. Did you hear that? SGN is retaining about 10% of these transacted shares. I don't know how many that is. What I do see is DRCR shareholders are getting 91% of those shares over here. At the closing, James Gibson will become the Chief Executive Officer of Signing Day Sports. He's the CEO of DRCR. So it's almost like there's a change of control for SGN becoming Swifty. Signing Day Sports Management will remain the management of the Signing Day Sports subsidiary that will be established in connection with the acquisition. So you're going to have both companies under one umbrella operating as two separate subsidiaries, but having their financials jointly combined. Now, who is Signing Day Sports? Signing Day Sports' mission is to help student athletes achieve their goal of playing college sports. Signing Day Sports app allows student athletes to build their Signing Day Sports recruitment profile, which includes information college coaches needed to evaluate and verify them through video technology. The Signing Day Sports app includes a platform to upload a comprehensive data set, including video-verified measurables, academic information, as official transcripts, and technical videos. All right, that's what they do. They are helping students get college degrees, get into college. But I'm having a hard time seeing the connection between the two businesses. But I guess it really doesn't matter if I see it. What we do know is that Signing Day Sports has affiliations with a lot of sports organizations. And we know that Swifty Global is a sports betting company. So the two of them probably have a lot of synergies. As we heard, this merge is going to cut down expenses by 50% for the company. So I see that the chances of Swifty uplisting and being the top dog is really what we're looking at here, not being the underdog. Now, what I want to do is show you some information comparatively back and forth. Looking at the relative volume of DRCR today. Being down on the OTC, she doesn't get a lot of shares. She's been getting like 193,000 every day roughly for the last 30 days. Today, it was up. She did about double that to 443,000. What did SGN do today? Wow, that's an explosion, folks. Boom! Going from 250,000 shares as an average daily to over 96 million shares today. That's hot, no doubt about that. Let's take a look at their share structure. Outstanding share count. We have got 53 million outstanding shares. The insiders own 23 million of them, which leaves us 29 million on the market, roughly 30 million shares. Now let's take a look at the share structure for SGN. I don't know what their float is, but their outstanding share count is real close to what our float is. What I'm saying here is that they're very close. When DRCR moves off of the pink up to the New York Stock Exchange, all of her shares are going to be exchanged for new shares for the new company. And normally you end up getting a lot fewer shares than you thought you were going to get. When you come into the OTC company and go up, you get so few shares for the tens of thousands that you owned of this cheap company. It doesn't look that way to me. Again, this company has all the money. This company is going to have the CEO at the helm. This company's got the same amount of shares as that company does, and they say they're giving 90% of their shares over to this company. So I think we're going to come out ahead, not knowing the numbers, folks. I haven't got any numbers. It just sounds ratio-wise, percentage-wise, it's all leaning in our favor. So I don't think jumping into DRCR is a bad thing. And chances are she could have a pop before this closes. Now, the sad thing is, this is a real long news press. Nowhere in it was there a date of closing. Not even a quarter. They didn't tell us second quarter, first quarter, nothing. So I really have no idea when this is going to close. They did say they do have more filings that are going to be coming out. An S4 will come out. That is going to be the shares being purchased. So we're going to see that 91% or whatever it is. We're going to see this huge number come in there. Let's take a look at the financials now. Financials for Dear Cashmere. Back in 2020, she was doing $27,000. Not 27. We got to add 3 zeros behind any of the numbers on any of these charts. She then jumped to 139,000 a year later, then blasted off to $25 million, and then blasted off again, right? She's making money hand over fist here, and the profits are growing. She is paying a lot for this, and I don't understand why she's paying so much, but the money is starting to pour in, and it's coming in really fast right now. Looking at her quarterlies, well, over the last year, she's been doing between 23 and 31 million. Looks like she's actually dropping right now. Profits are dropping a little bit, but the revenues are steady. We can't really complain about that. Let's take a look at SGN's financials. All right, over the last 3 years, she's jumped from 340,000 down to 78,000, took a heavy loss that year, jumped back up to 307,000, and she got to keep most of what she earned. But it's not a lot of money, is it? Quarterlies, she's all over the place, isn't she? Up and down from 55,000 up to 234,000 and everything in between. Best thing we can say is she's always pulling in a profit. Nice there. So you can see who's got the money. Who's really in charge here? Who are we really looking at? When you're looking at companies on the market, you're looking at who's making more money. Right now, DRCR is so far ahead of this company, and I don't think SGN is going to be making any big money. I think all the revenues are going to come from DRCR, and maybe they've got some program to have some of that money funnel in to what SGN does. Let's take a look at DRCR's balance sheet. In the bank, the cash and cash equivalents, they've got about 2 million. Total assets is about 8 million. Total liabilities is only 1.8 million. So on top of strong revenues, good profits, we've got stockholder equity of 6.1 million and a low share count. This company really does look good, folks. Let's take a quick look at SGN's balance sheet. We got $1,000 in the bank. You need that or you get the account closed. Total assets, 1.1 million. Total liabilities is more than double that at 2.6. So we are holding stockholder deficit in this company of 1.5 million. Let's see if we have any disclosures I may have missed over here. Well, we've got nothing since 2024, and I'll bet you, well, that's just a quarterly report. You don't get any filings with pinks, right? That's what I told you. All you get are disclosures. Disclosures are financials, but they're not looked at by a CPA. They're not actually audited. It's just a bunch of receipts and tallied up numbers that the management puts together and gives us. That's it. With pinks, really all you're doing is trusting the management because we have no validated information. The press releases, you might as well consider hype. Take with a grain of salt until you see filings backing them up. Now, the great thing here is that they're merging with a company on the New York Stock Exchange, which will have all the filings backing this up. So if we come over here, just jump into the same folder, disclosures, and in here somewhere, I don't know which ones, in here you're going to find things that start talking about right here, right? DRCR. You can start getting information about what is going on. They're going to have all the filings. Here we've got one for shares of stock. I don't know if this has anything to do with the agreement, but you've got $5 million worth of shares, which isn't a whole heck of a lot of shares. And then a lot of Form 4s here. Let us take a peek at these Form 4s, folks. Form 4s are filed whenever the insiders, the partners, acquire or dispose of shares of the company's stock. The same stock me and you trade. Well, what you do is come in and immediately just go right down here in the center. If you see a P, it's a purchase. If you see an S, it's a sale. If you see an S, it's a sale. If you see any other letter there, it's something else. If you're curious to know what it is, you might get some information here underneath explanation of responses. This is neither a sale nor a purchase. I can see all of these are on the same date, so chances are every single insider had to go through it. Yeah, see, we got an F here. And you'll probably see every single insider was a part of whatever was going on here. So this is where you'll get your information. So if you want to keep up with DRCR's merger and you want to see the S4 filings or the S8 or whatever they're dropping, they're going to be over here with SGN because they don't file filings with pinks. Good thing to know, right? I do believe that covers everything but the charts, which we will look at both charts. It's only fair, right? We're going to start with SGN, the hot chart, and then we're going to look at DRCR and see if we can get ourselves a good entry. So I took a bit of a detour over here to Thinkorswim, my free trading platform, and I learned something, and it really surprised me. And I think it's going to surprise you too. We're going to take a look at SGN first. I've opened her up to a 1-day, 1-year chart. And the first thing you notice is that humongous green bar right in the middle of the chart. She jumped that day from $6 up to $36. In 1 day, a $30 jump. Now, I just naturally presume that was from the PR on November 11th when they were merging with Swifty. It isn't. That's September 19th. That jump right there is from November 11th. I had no clue what caused this one, and I was darn well curious. So I just went through the filings looking, and I found an 8K on September 19th that told us they were acquiring and merging with DRCR. I had no clue they had mentioned it that early. And I always say, folks, the Virgin hearing, the first time you hear about a merger or an acquisition is going to be the biggest jump you're going to see out of that deal. Well, as you can see, it was a huge jump. That was a $30 gain. The news when it came out gave us a $5 gain. So, a year ago, our 52-week high we're at $42.24. Our 52-week low, which hit just about a week ago at $1.75. And as you can see, we've got a big push happening right now. Let's get a better look at that push. Let's come on down to the 1 hour. Yeah, look folks, she was underneath the 200, really doing nothing. Just falling lower and lower, very, very slowly, but falling. Then on the news, she jumped from $2 up to $7.24. We're on an hourly chart, so she did that in 2 hours. Boom! Then she fell back to $5, and she has been dribbling downhill ever so slowly back down to her 9-day MA. That is a controlled fall. We call that a healthy pullback. It had to come down, folks. That price is way too high, way too far away from the ground. This isn't a bird. It hasn't got wings. It doesn't fly. It bounces, right? We see the price bounce like a kangaroo, so it had to come down to bounce on something. And we're lucky. Falling from that height, they could have easily broke through the 9 and come down to the 20. And it looks like she's doing her best to hang on to that 9 right now. All of our oscillators are pretty cool. They're all going sideways at this point in time. Let's come on down to our 5-day, 15-minute. All right, what I want to do here is zoom in with my Fibonacci. The Fibonacci is a tool that I use on big drops or big pops. You poke the top and then come down to the bottom and poke it, and it gives you these white lines. These are Fibonacci numbers. They're magical numbers, folks. They are wrapped around science that we can observe. We can see it works. We just can't prove and understand how it works. And it works in a lot of different areas, in Mother Nature, science, the financial world. So these are supports and resistances based on that surge right there that the price is going to respect and I can use to trade with. So what I use this primarily for is I look for the 50% mark right there, the halfway point, right, dead center. If the price comes down underneath the 50%, there's a strong likelihood she's going to continue to fall until she finds a strong ground to bounce off of, another MA. If she can stay above the 50%, there's a stronger likelihood she's going to bounce and start to climb. Well, she is fighting to stay on that 50% right now. So we are right at that cusp. All right, let's come on down now to our other stock, which was DRCR. Gonna need a little more chart than that. Let's roll this back to 3-year, 1 week, which will get us back to 2022. Remember, I told you, I've been covering this company since 2022. Back before they had anything. Back when they were basically nothing. This takes us back to that time. We've got a high here of 84 cents. That was back in April of 2022. And we've got an ultimate low for the company of 3.4 cents, which she hit in January of 2024. Off of that low bubble, she managed to get on top of the 50-day MA, which is ever so slightly climbing, and she was bouncing off of that, and then she just fell underneath the 50. Now, this could be a coincidence at the same time that our 200 haul comes onto the board, but truth be told, in most cases, when a new MA comes onto the board, you see the price gravitate to it. Doesn't matter if the MA is above it or below it. Sometimes it sticks there. Most of the time, it just goes back to whatever it was doing. So maybe this was a greet and meet. Maybe it's just going to jump right back up here to the 50. And maybe, fingers crossed, it's going to do a meet and greet with the 200-day MA. Wouldn't that be nice? She'd be jumping from about 11 cents up to 42 cents. Woohoo! We'd like that. Let's go on down to our 1-day, 1-year chart. So we have got a 52-week low here of 4.2 cents and a 52-week high of 29 cents. And this all started with an atypical breakout. Folks, look at this very closely. You have your 200-day MA falling. You have your price sitting on top of the 50. You have your 200 haul underneath. It was falling. Mine changes colors as soon as it starts to rise. And when I see that happen, I normally see fire on the charts. What do we see, folks? We see fire. It is igniting. Now, if I just take it from right there, 5.5 cents, she ran from here to here, 15 cents. That is a 300% run just off of that atypical breakout. But she wasn't done. She continued running for a few months, all the way up to that 29 cents, which she hit here. She then fell back to the 50, went underneath it doing a quick U-turn, and jumped right back up, hitting that high again. Then she crashed, went through all the MAs down to the 200, and even with all of these MAs coming down on top of her head like waterfalls, she busted out again. Came right back up here to 29 cents. You know what, folks? I'm drawing a line there. She likes to stop climbing when she hits 29 cents. So if this price starts to run and it is closing in on 29 cents, I'm selling before it hits that line. Once she hit it the last time, she did fall, breaking the 200. She came back up over the 200, and I would have thought she would have continued running. Our 200's on an incline. It's climbing. All of our MAs looked like they were settling out, but she went against the current, maybe being shorted. I don't know. But she came underneath everything, hitting a low down here of about 8 cents, and she is bouncing off of that, trying to get up on top of the 200 haul right now. And all of our oscillators are warming up. Everything is just now starting to climb. Let's come on down to the 6-month, 4-hour view. So there's our rip to our highs, down to our low. Our 200 is falling now. Right here at this last high, when she came down to the slow, she yanked our 200 MA down. She did go through it, but we don't break out on a falling 200. So she followed that down. Right now, she is trying to break out. Everything is setting up beautifully. Our 20-day MA is turned up. She just landed on it and bounced. Our 9-day is doing a golden cross over the 50 and the 200 haul. That's power. Our price is working on top of the 50 right now. Our 200 haul is just starting to level out and go flat. And there's the 200 MA. So everything is getting into place right now for an atypical breakout. I do see power coming into the picture. We got lots of green volume here. No red at all. Our oscillators, look at that. We got a crossover on our PPO, percentage price oscillator, which is a lot like your MACD. The MACD uses the full price. The PPO uses a percentage of the price. We've also got a crossover on our MACD. It's crossing the MAC line right now, or the signal line, the MAC line. And our RSI is climbing. That is up there at 58 right now. Let's take a look at our 1 hour 20-day. Yeah, look at that, folks. She is right at breakout point. We were at 15.5 cents here. Came down to 50% of that, 7.3 cents. She bounced. She got up on top of the 50, lots of excitement. You see the bars getting big. She fell down to the 200, bounced back up to the 50. She's on the 50, blue 200 haul, 200 MA above her. Folks, this looks like it is ready to pop. She looks like she's ready to go. PPO is on the right side of the other line, climbing slowly. Our ADX needs to make an adjustment. Our MACD is warm. Things are warm, folks. I don't see a lot of explosive heat, but things are definitely warm. This is our 5-day, 15-minute chart. We now have an uptrend. We were at a low 5 days ago at 9 cents. We hit a high here of 13 cents. She has pulled back, and she is bouncing on her 200 haul right there, respecting it beautifully. Everything looks luscious here, folks. I am liking it. I'm thinking DRCR is a good play to get into. We could make some gains right now for a run before the merger. When is the merger going to happen? We don't know. That we have no clue about. But I do want to state this, and this is just my opinion. It's difficult to tell the share structures and how they're going to lay out after a merger. But with both of these companies having about the same amount of shares, with SGN turning over 91% of those transacted shares to us, the shareholders of DRCR, and us having all the money and us having our CEO take over the company, I think getting in before the merger is a safe deal. Don't hold me to it. This is just my opinion, folks. This is the way I'm going to play it. I'm not going to get into SGN. I'm going to get into DRCR. And I'm going to hope for a run early. I'll probably take those gains and watch it fall. And then I'm going to get in again and I'll hold that for the merger. That's my plan. But you do whatever you want to do. So hopefully I've given you food to think about here, folks. Some more due diligence isn't going to hurt. There's information out there. And as I said, as the information comes out, it's going to come out under SGN's ticker. It's not going to come out under DRCR because they're pink and they just don't have any filings. Thanks for your time. Remember, folks, the more you know, the more you're going to grow. See you, folks.